So today we're going to talk about some of the factors influencing the gold price. I have 3 new coins to show you today. We have 1 sovereign and 2 quarter ounces. So we'll go over those in a moment as we talk about our topic. So the first one we're going to talk about is interest rates. So a higher interest rate means you are getting a better return on your money that you have saved. So if you have money in the bank, let's say at 5%, that means your money is growing by 5% each year. Now, you wouldn't be the first to notice that if the inflation rate is higher than the interest rate, it would be a negative real return. But gold itself doesn't have any yield. So if I have this 1 quarter ounce of gold, in a year's time, it hasn't bred. It's not going to be, kicking off little baby bits of gold. It's not going to be throwing any cash at me each month. It is just going to be that 1 piece of gold still. So when you have higher interest rates, it dents the appeal of gold because you can get better returns elsewhere. Now, gold price obviously might jump up better than the interest rates, but you just don't know. Whereas if you've got your money in the bank, you are getting that guaranteed interest, assuming the bank, pays out. Government bonds, they also are going up with interest rates. So when the interest rate is higher, you get a better return. And, if you've got a government like the US government, for example, they are able to print the money and effectively you will get those dollars back. Doesn't necessarily guarantee what they'll be able to buy when you do. But, these government bonds, a lot of governments haven't defaulted on these and therefore people feel safe in knowing that they'll get the amount back plus the interest that they are, contracted to, if you like, what they're expecting. So that is interest rates and bonds. There is also, like I say, opportunity cost. So people might put their money elsewhere if they feel like another asset class is going to do better. So there might be lower demand in the gold bullion market. People might be looking ahead and thinking, well, these property prices have been going down for a while. Let's speculate that they might start to rise more in the short term. And so there might be less demand for gold and more demand for other assets. So a little bit of supply and demand there. I know most of us, who are watching the video, we're not really going to influence the gold price by our weekly purchases or monthly purchases, whatever we're doing. If we all club together and buy a couple of ounces each, it's not going to really make much odds in the gold markets because we have the paper markets. Now, what they essentially are is where institutions, investors, retail traders, we're allowed to speculate on the prices, buying contracts of certain metals, certain commodities, certain shares, stocks, everything like that. You can basically have a contract to buy, and people buying and selling these contracts creates also demand on there. Now, that's another video, the paper price of gold versus the physical price. I own physical gold because I like the attributes of physical gold over paper assets. I'm sure many of you are in agreement there. But on to the next one. So supply and demand can affect premiums. Now, the gold price itself is one thing, but the premiums are another. So, for example, in late 2022 in the UK, there was some political nonsense going on. And basically the pound crashed quite considerably. We went down to, not far off parity with the dollar and the euro. It went down quite considerably. It has recovered a bit now, a year and a bit on. But at the time it was, I'd call it a crash, to be honest. A significant chunk down. And people were basically wanting to put their money somewhere safer. So there was quite a lot of demand for gold. A lot of the dealers put a note on the website, excessive demand, really high demand, expect delays in your orders and things. Some were also offering higher prices than spot for their, people to sell them the gold. And it was an interesting time. So supply and demand can influence things. And obviously when you've got more demand for certain coins, certain items, certain metals, certain commodities, then it can, push the price of those up. Like I say, it's unlikely that us going to the shop and, buying our couple of ounces here and there is going to make much odds. But, over the whole world, if there's a lot of demand worldwide for certain items, then the price of those will rise. So we mentioned premiums briefly. Like I say, the premiums on sovereigns were hitting close to 10%, and that was fairly normal. Like, it was difficult to find them down around the 5% mark, whereas more recently, this past few months, premiums have really been getting hit on a lot of coins. It's been very difficult for sellers to get any kind of premium for, Britannias or Krugerrands, or even smaller coins. Even sovereigns have been going around spot or just over, or even just below. So it is an interesting one to consider. The premiums there, they can be affected. Now, the next one we're going to talk about is inflation. So gold is traditionally seen as a hedge for inflation, or a hedge against inflation rather. And many people believe that, owning the gold will protect them from inflation. So I'm not here to argue that point today. But the main thing is, if people perceive inflation to be coming along and they believe gold or silver will help them hedge that and protect them from that, then they might well be more keen to invest into gold or save in gold or put their money into gold. So that is another consideration. Gold price has been quite volatile lately. If you watch the markets, you'll have seen that. And a lot of that has been around triggers in the news, such as inflation data, such as interest rates, and people's perception of those as well. So one more thing I'll mention that could affect the price of gold or price of silver is taxes and regulation. So in the UK, in 2020, the UK left Europe, and because of that, it meant that there was no longer a avenue to bring gold into the UK tax-free, so VAT-free, and that meant that anyone who was selling on the second-hand market knew that they could charge a higher premium because people didn't have any option. You go to a dealer in the UK and you're paying the dealer's premium plus 20% VAT on top of that. So if gold was, say, £20 an ounce, with a dealer you're looking into the 30s. Sorry, not gold. If silver was £20 an ounce, you were looking closer to £30 an ounce for buying your silver, from a dealer. Maybe even a little bit more. It did steady off, it did come down a little bit, but even so, that did cause quite a drastic change, I would say, that I saw in the second-hand markets for silver. Now, if something like that came along for gold, if it was going to be harder to buy it or more expensive to buy it, then the premiums on what you already own would, in theory, rise on the second-hand market. But you might also struggle then to buy more. It might be more expensive to buy some more. So those are some of the factors that affect the gold price. Not conclusive list, but some to give you an idea of, some to give you an awareness of. And there are obviously things like news events that can affect the gold price in the paper markets. So, we've seen a few of those in the last couple of years. Something to consider if you're a trader. Then, you could perhaps trade with the news on different stories as it happens. But there are obviously many different ways to trade, and if you're just looking to accumulate gold for the long term, if you're not looking to trade in and out of it in the short term, then a lot of these factors, they might present nice opportunities for you to add more or to perhaps slow down your buying a little bit. But ultimately, if you're a long-term investor into gold and you're just saving for long-term in gold, you might not really care.